known to all of you as a key influencer in the Indian financial industry and sector. Am I missing anyone, Mr. Popley? Thank you. We have a challenging session here. Challenging for a couple of reasons. We're supposed to put financial solutions on the table. There are a lot of problems and a lot of solutions, but there have also been a lot of wins. We have done an incredible job. You have done an incredible job at growing the Indian renewable energy sector over the life of the current government, from what has been small to a vast sector. Now, we've still got a long way to go before we reach the 220 gigawatt target, of course. But, you know, there have been an enormous amount of wins. This is a really important part of what we have to do in India. Clearly, it's a part of energy for all. We need to take energy out to everyone in India. We need to make sure everyone has access to lights, so students can read at night, so we can get access to telecoms, all of these things. We also need that energy to drive growth. We are not going to be able to soak up the unemployment, the new people coming into the workforce every year in vast scale, unless we have constant, substantial economic growth. That requires energy, and that requires clean energy if we're going to have some kind of air we can breathe in. Delhi's air is already the worst of any major city in the world. It's not just the burning of the fields afterwards, it's also the petrol and diesel in Delhi, which is a huge problem. Shifting to clean energy and then shifting to electric vehicles as a result of that is incredibly important for this transition. So you can have a 7-year average longer life expectancy if you live in Delhi. Think about that. What could you do with an extra 7 years in your life? There we go. That's what clean energy will help deliver. But lastly, the coup de grace for economic stability. We have an economy here that goes up and down on the oil price. We are the most exposed large economy in the world when it comes to oil prices. This is not a good way to get stable long-term growth. It is critical that we wean ourselves off that oil. How are we going to do that? We're going to do it with clean energy. Now, we're not going to do it on coal for a bunch of reasons, partly because clean energy is becoming cheaper, and partly because if we do it on coal, we're going to have the health problems going forward. Coal will have a place in India for some time. The growth is already renewable energy, but we need even bigger ambition than we've got now. We have these challenges. We have the challenge of capital cost in India. It has improved in the last few years, but it's still expensive. We have the challenge of off-take creditworthiness. We have the challenge of access to land. Admittedly, some very innovative solutions have been coming around. We have the challenge of falling solar prices. What is this going to mean for the viability going forward? But we do have some macro challenges too. We've got discoms. Okay, we all know that discoms are scary as an idea. I'm not going to go into the details how we solve it, but let's acknowledge it. Discom payability is a critical challenge for people in the renewable energy sector. We've got foreign exchange challenges. Well, this month we have, that's for sure. We've got a general challenge around banking system liquidity. Look, we've got still a challenge around policy stability. We've got a lot of challenges. I'm going to ask our audience to cut straight to solutions. So I've asked them not to introduce who they are. You already know who they are, and if you've got the guide to the conference, you will see some excellent biographies. Read them. I want them to take us straight to a bunch of solutions, and then I'm going to go to you and ask you to contribute and respond immediately afterwards. So be prepared. You will need to talk, and if you don't put your hands up, I'm going to be walking over you for the microphone. Get ready. First, I would like to start with David Raskina, my good friend, who is now the Managing Director of the Export-Import Bank of India. Kick us off, please, David.
Good to be the opening batsman. I'll go with policy stability, Sean. When you're a lender and a renewable energy project, which goes on for many years, over a couple of decades sometimes, you need to have stability of cash flows, and stability of cash flows come from stability of policy regarding tariffs, regarding import regulations, regarding all these ideas. Now, I understand that in a developing scenario, particularly in a field as new as renewable energy, there has to be fine-tuning of policy, there has to be changes of policy from time to time. We need to accept, however, that existing projects or projects in the pipeline need to be grandfathered so that they can benefit from stability and then the policy can go forward. Even if this risks creating a set of rentier projects, that's part of the price to be paid, but policy stability is what will bring in finance and keep the investor going.
Thank you. Bruce, representing the money.
Look, I think the challenges India is facing are no different than the challenges being faced by the renewables industry globally, which is, as described here, you've got an incredible opportunity as costs have come down, which is making electricity more accessible and leading to this energy transition, which is an incredible policy benefit for governments. But as described, like, as costs come down, making sure that you're reaping the benefit of that by providing stability as the energy markets evolve. And what I mean by that is, as you move by different types of contracts, as costs come down, you've got to recognize and grandfather historical provisions. So making sure investors like us, when we come in, we understand as we invest at different points in time of the cost cycle. So, when we're investing at early stage, when costs are higher, there's early adoption, to stages where it becomes much more industrialized, we're getting the benefit of that in terms of not seeing that revisited or changed. And also, I think the other thing, which again, consistent with other countries, is having alignment between state and federal levels. Energy is complex. Dispatch is complex. Managing both transmission and generation is complex. But getting consistency of approach, so people like us, when we're managing a very large global portfolio, have transparency and understand how state and federal levels work together, how creditworthiness of counterparties works together is important. Because, speaking for myself, we have in the last year invested $3 billion globally in 10 different countries. So it's hard for us to get into the details of each one, and you don't want us to make the hard decision between a complex environment versus a simple environment.
Very good points. $3 billion globally. Okay, remember that figure. Mr. Poppy is taking notes. He's going to give us a short, sharp summary at the end. Thank you, sir. I'm just warning you now. Sindhu, you've already been a successful developer. You're trying again. What's your view going forward?
So I think we've talked a little bit about policy, so I will skip that. I think two quick fixes. I think one of the challenges that we've historically faced and still hasn't been fixed is that of the payment security concern. I think that's been there right from the start, 2010. It's definitely improved with the Uday scheme. But going forward, I think there's two things that still can be done. One, I think, is simple, deemed generation. We know that renewable is going to increasingly become, as renewable gets added into the grid is going to get unstable. But can we contractually look at a take or pay kind of a contract, which is prevalent in many parts of the world? I think India hasn't done that yet. That's one thing that we can consider. I think on the second is on the DISCOMs payment. We've been hearing this as well a little bit, but I think there needs to be more around pooling of DISCOMs risk, or basically a credit enhancement to address the payment security issue.
Fantastic. Can I actually ask Prapod to come in now? You're lending on a project basis across India. You have a huge footprint. Your thoughts?
Banks, as far as I am talking about my bank, we are supporting the renewables in a big way. And incidentally, we are not having any experience of NPAs. We have got a policy and we have got certain parameters. If the proposal, if a particular project meets those parameters, we go for the expeditious processing, and provided all the parameters are acceptable to the concessionaire or the other developer. Problem starts, you see.
You might need to move the microphone.
We do not have any doubt or any problem as far as implementation of project is concerned. The problem starts when it's a question of debt servicing. We find that PPAs are renegotiated, or even if the project is almost on the verge of implementation, PPAs have not been signed, or the grid connectivity is not there. All these issues make the repayment doubtful. There has to be a mechanism which should take care of these things. You see, ultimately, banks are dealing with public money. And this is the money where we have to ensure the security of that money. Unless until we have surety about repayment of our dues, that makes our life difficult. What I think is that, first of all, when government wants to go so aggressively and they've got an ambitious target for renewable energy, the cutoff for the priority sector must be increased. This 15 crores is a very low target. Once it is given when the large projects are covered under priority sector, this will be an added incentive for the banks to go for such type of projects. Because priority sector is something which all banks have to achieve. All Indian banks have to achieve 40% of their investment, their lending has to be in priority sector. And once it becomes a priority sector, we can have a system, we can think of a system where we can create a portfolio of good assets which have become operational. And these can be traded in the market, where a bank which is deficient on priority sector lending can go for purchasing that portfolio from the market. This is something which we need to think. We need to provide some incentive if we really want to put money in renewable energy. There is a problem with discoms. There is a problem with grid connectivity. Money will come, money will not come. Even there is a problem in the PPAs where the PPAs are not providing an opportunity to create charge over the project assets. Under this scenario, how the banks can lend the money? So it is required that this particular investment has to be provided necessary liquidity. And for that purpose, I feel that, first of all, and I think the various associations who are associated with it, they have already approached RBI to give it priority sector status.
Okay, nice clear call there. Thomas, you've been working at the Japan Renewable Energy Foundation for quite a long time now. Give us a perspective from the work you've done.
Well, I think I would like to re-emphasize what David said in the beginning about stability. It's not a problem when policymakers learn to improve policies as long as it does not affect those who have already taken decisions. So don't procure solar projects and then talk about import tariffs on solar panels. That is disappointing many. I also like Bruce's comments about the importance of staging the finance in the different stages of project development, where initially you have a lot of risks and you want high reward, and in the end renewable energy projects are often very stable and suitable for completely different financial structures than in the early phase. What I would like to add as an advice to people in the industry in India is that as the renewable share of electricity generation increases, you can no longer expect that the government would cover your market risks. We have to have more of a competitive power market to ensure power balance. That means that you will have to learn to manage market risks in private agreements rather than relying on stable feed-in tariffs from government agencies.
Okay. Ashok, can I ask you to dive in at this point? Where are you? Your thoughts? Is Ashok? Oh, sorry. I can see him.
See, we need to look at the entire renewable, we need to give it a holistic approach. The problem is not only in lending, but right from the project development to implementations to its operation, there are a number of problems, and those problems have to be fixed. It is not that these problems are unique to renewables. These are to every sector of the economy. And I would say, to a great extent, the risks and the challenges for the renewable sector is far less than if you look at around us to any other industrial sector. When we started funding in 2010, we wondered, is the renewable a viable option for funding? Today, the sector has moved a lot. It has matured significantly. And I believe the challenges as we see today in terms of the quantum of funding, in terms of the right kind of institutions, right kind of financial product, as we move forward, those would evolve. 2011, there was plain vanilla funding. Now we have seen the structured product, we have seen the securitizations, we are seeing ballooning, we are seeing infrastructure debt fund, we are seeing evolution of a different kind of developers, those who are able to take implementation risk, and later on those who are able, those who are not willing to take larger risk and would like to take the operational projects. The infrastructure debt funds are evolving. So the world is changing and would change fast. And I would believe that the challenges as we see today would be resolved as we pass, as we cross the bridge. The point that was earlier pointed out is that so far we are too much dependent on the government support, on the discoms. We have not looked into the vast market mechanism, and that's possibly if the growth of 175 gigawatt or more than that has to come to develop to the market mechanism and also the market institutions. I think considerable work requires to be done in that area. The kind of contractual arrangements or agreement that we have as of now are far weak. Hardly any institution or lender would like to support that. The transmission arrangements, the regulatory changes in terms of open access, those are the real issues. The government in any case is there. They have been supporting this sector, and I'm sure they would continue to support. The point is that as a developer, as a lender, as a market institutions, we have to carry that forward, taking it away from the government support to the market mechanism.
So you're agreeing with Thomas, essentially this is the way forward, going forward. Okay. Can I actually ask Doug now to just dive in from the point of view of this development of green specialist institutions around the world and your thoughts?
Sure. So thanks, Sean. One basic problem is, well, if you ask a developer or a banker, they say there's plenty of financing for good projects. That's a trivial truth. The reality is that there's a need to go beyond those good projects and top-level developers to actually meet India's targets. The amount of debt being provided is about 6 to 10 billion per year, and 20 to 20 billion is needed to meet those targets. That's both additional domestic local currency sources for project finance from the banks, and also bringing in institutional investors both internationally and domestically. So, and there's a wealth of institutions in India that are providing financing that are publicly owned, like EREDA, which is an expert lender. What no one's doing is systematically trying to accelerate market transformation and crowding in of private capital. No one's doing that. So what could happen is that along the lines of some of the examples that has been seen in the UK, Australia, other countries, you can create a dedicated fund or a series of funds that is focused on de-risking these projects. Now, not market risk, but certain risks which developers can't actually mitigate. The small projects in particular have a problem getting financing. There's been some really excellent project preparation facilities in India and that are fully bankable by international standards, and they can't get loans from Indian banks. That's a problem. Someone's got to make those loans. How do we structure these institutions? Well, they can't be directly part of EREDA because that will drag down EREDA's balance sheet. They can't offer market rate products because the risk is too expensive. There needs to be a pool of capital that could be deployed by the government and managed by EREDA in partnership with a private manager to undertake these challenges. There's also institutions like NABARD who have sector focus and sector relationships, and of course SBI, which could also manage these kinds of funds which are dedicated for these kinds of purposes. The FX risk is one that's often cited that's got to be managed. The aggregation of small projects, the freeing up of balance sheets to the capital markets or to alternative investment vehicles, all that's got to be done, and it would be accelerated if it was somebody's job to do it.
And the aggregation vehicle will be especially important for the smaller developers in the room, because they'd then be able to sell off their assets to an aggregation vehicle and recycle their capital faster, right?
Precisely, yeah.
Okay. Satish, you've got a brave new venture you're working on. You've got to make this work. So what do you think's got to be done to ensure that your investment capability can really come to fruition?
Thanks. The fact that we are sitting here after 4 years of doubling the capacity, which has happened, means that the country's policy and policymakers have done a good job. Having said that, the context is how do we channelize more private capital into this sector? And I'd like to offer two suggestions. The first being the prevalence of green bonds which is missing in the balance sheet of all the institutions, NBFC.
Sorry, did you say green bonds?
Green bonds, which is...
Isn't he
which
a great guy? I love green bonds, funnily enough.
Right, so that's missing in personal portfolios of the people when you are investing into a debt. It is missing in institutions' portfolio as a mandatory requirement. It is missing in NBFCs. My colleague just mentioned about the limit of 15 crore being low for the priority sector lending, but purely making investment into renewable energy generation as a priority sector lending item itself can open up a big arena for mushrooming growth on a retail side, which has not happened in this country. The country has done well on a utility scale. We have moved a lot to 70 gigawatt capacity. We are doing partially, or we have initiated something on a commercial and industrial scale, but there's nothing which has been achieved in relation to the retail. And that is one bit which can help by having a green bonds coming into the picture. And second thing which I like to talk about is basically need for a institutional guarantee mechanism. Today, most renewable energy projects don't classify as investment grade because the off-takers rating is very poor. Now, these off-takers are invariably the government entities of state government or at times central government, which has a great rating, but obviously the most state government entities are having a very poor rating. So if there is a guarantee mechanism in place, which is able to compensate for the lack of credit rating of the off-taker, then there is again a huge amount of capital which can come from various pension funds and others to bring in and to really fuel the growth of this sector, even at a faster pace than what we have seen in the last 4 years. Solutions.
You're picking up on what Doug was saying to a certain degree and taking it further. Okay. On the green bonds, by the way, it's worth noting that even an investor like CPPIP's issued a green bond in the Canadian market for one of the things. This is a growing international thing, but I want to turn to Mike now, because he and I have been working on promoting a global green bond market for some years as part of a financing, a marketing theme, if you like, around fixed income. Mike, I'm not going to ask you to talk about green bond necessarily. Your thoughts on this market? You've been financing renewables for a long time now, taking it forward.
Thank you, Sean. Yeah, I've been coming to India financing solar energy since 1996. That's 22 years. And it's been years of struggle and failure until 2014, when the new team under Prime Minister Modi came in, and we were faced with impossible challenges on financing renewable energy, mostly solar, because of the issues that's been described. And what we have witnessed, and I congratulate India as the new model of effective government, taking the challenges and answering each one of them one by one. And the one I want to point out is the creditworthiness of the discoms as the offtake. Well, there's a lot of discussion in the public sector about getting the private sector to step up and take those risks. Well, the other approach to get the private sector money is to reduce the risks. Reduce the risks, not ignore the risks. Address it. And you have the UDAY program. The UDAY program has refinanced $50 billion equivalent in rupee bonds. That program has, the journalists haven't caught up with it. Angus, you got to report on this. That $50 billion has established a rupee bond market in India, because there was never that volume to create a liquid bond market. And it happened, myself and another banker from Citi recommended that to Minister Goyal 4 years ago when he came to New York to ask us to raise dollar bond market money to finance the solar projects they needed in India. And we said, no, you got a problem. You got too much bank debt in the discoms, and the state banks are overextended to the power sector. So the discoms are not creditworthy offtakes, and the banks have no money to lend to the solar projects. You have to address that and solve that. And they did. And Minister Goyal went the next day when he returned to India to see the Prime Minister and asked for his assistance to create a rupee bond market to refinance the whole system. $50 billion has been placed in rupee bonds. All of that money has been used to pay down the discom, the SEB and discom debt, which means the banks have received $50 billion equivalent in rupees in liquidity that they can now lend to the solar projects, which have more creditworthy offtakes. It is a national refinancing of the electric sector to allow this phenomenon to happen. Now, quickly, and we'll come back to it later, but India is going the wrong way. Excuse me. I've been here a long time, so I'm allowed to say this. we're going the wrong way right now on the credit quality of the projects, which is the other half of it. 3 years ago, a bid would be made, and the standard was bids were prepared with an 8% return on equity. Because interest rates went down, liquidity went up, cost of equipment went down, the first round of projects have come in at 20 to 25% rate of return on equity. That's why you have a successful industry, because they came in better than proposed. Now with the competition that got drawn into that profitable industry, there's overbidding, and you're under government procurement, which takes low price. Our recommendation is to add the debt service coverage ratio along with the cents per kilowatt hour. The bids should be 2 numbers, not 1. And so the financial viability of the project at that price must be disclosed, and there should be an accounting letter in the bid that says that that is the correct number according to a reasonable review. So this is my recommendation for then addressing the risk issue. And if it doesn't get done and these prices keep going lower, at the same time your quality issues are going up, that means 5 years from now these projects are going to generate less revenue than is projected. They will not meet debt service, and you are creating a failure 5 years from now right now. You must step up and stem that. It can be done if you ask for that one number as to the financial viability of every bid. And I recommend this not just to India, I'm saying this in all developing countries that are running low-price bid under government. So, well, great, congratulations on the U Day and dealing with that. And next is what I recommend here on the credit quality of your project.
Thanks, Mike. A great, clear recommendation here. And as I was looking to Satish and others around, the people were nodding their heads and saying yes, yes. I actually want to ask Pradeep now to say a few words, not only from your perspective, the UN Combating Desertification Agency, but also UNIDO, where you spent a lot of time on development before that.
And thank you, Sean. For me, coming to this conference was very good in the sense that we really hear about targeted financing. We're looking at fiscal policy, financial instruments. But let me highlight one very important dimension for a country like India, which is land. A finite source dealing with infinite energy resource. For instance, India has about 2.5% of land area of the world, 18% population. And out of this 2.5%, 1/3, 100 million hectares is degraded land, desertified land. Water tables are going down, land productivity is going down. Look at the population growth, livelihood options, poor communities, more than 400 million plus. What are we talking about by 2050 or 2030 if India has to move forward for sustainable development goals? And the only way to approach is, when we talk about renewables, we are talking about energy security, climate justice, but let us also add social justice, ecological, eco-services justice also. A very good example is, unless we try to integrate sustainable land management in renewable energy projects in India, I feel we are opening up gate for many other problems India will face or any other country. A good example is for all solar parks, solar energy, except for rooftops, we are talking about 2 hectares of land getting diverted per megawatt. 100 gigawatt, 200,000 hectares. All wind energy parks, 12 hectares per megawatt. So together, if we want to have 100 gigawatt of solar and 60 gigawatt of wind, we are talking about 1 million hectares getting diverted. And I feel, and all the bankers present here, please see there's a new concept which is part of SDG 15, land degradation neutrality. Any project where land is price is given and it is almost taken, assumed, please insist that if it is agricultural land, don't look at the procedural approval of state government, central government, and NGT approvals. Similar land somewhere in India should become productive. So that cost of that land should be also included in the project. I'm adding to the cost, but there's long term. Second, if it is a degraded land where solar parks are coming up, there should be somewhere how to add to productivity, livelihood, jobs, income level of local communities, because that will go a long way. Second point, soil carbon is more than all carbon together in air and forest. It means when the carbon market will start moving, there should be incentive for all solar or renewable energy projects to go for carbon credits also. Of course, we have to monitor it, we have to measure it, and we are working towards that. And third, to really promote land degradation neutrality, which is just to really drive, especially to make all financial experts and banks interested in that, We have launched a very small global fund last week in New York. It is called Land Degradation Neutrality Fund. It is capitalized for $300 million as of now. It will be focusing on risk mitigation, especially on commercial lending for where sustainable land management activities will be undertaken, and renewable energy projects will be part of that. What I'm trying to say is this nexus issue between land and renewables, it's better we start integrating now instead of addressing that problem 10 years down the line. Thank you, Sean.
Fantastic, thank you. It is a really good point about soils too, which is not strictly in solar, but the extent to which soils can be a source of carbon sequestration for us.
Yes,
Very
absolutely.
important thing for us to tackle. Thank you for those thoughts. I'm going to finish up with Angus Macron, who's the world's, in my view, #1 commentator on new energy finance. Angus, you've heard all of these people. Your thoughts going forward?
Thanks very much, Sean, for setting me up for a fall there. So I come from a European perspective, based in London, and very interesting to hear what I've heard at this conference this week. Striking, in many ways, the Indian sector is ahead of that in Europe in terms of, for instance, getting capital costs down, the natural resources that it's got, particularly in solar, the competitive environment, and the entrepreneurial flair. And we heard from Renew Power Ventures, a very inspirational speech this morning about that. But I was struck by the fact that we had our European summit, Bloomberg Energy Finance, earlier this week, and we didn't have a session on financing challenges. And the reason is that there's a lot of finance in Europe, and for instance, in Germany, you can finance an onshore wind project at 2% all-in cost. Even in the UK, financing costs are low. Institutional investors have become a very important part of the picture, and they're putting something like 9 times on our figures as much money into renewable energy projects in Europe as they were 10 years ago. So they've really sort of got the appetite for it. But we do have a financing challenges panel here in Delhi, and clearly from what my colleagues around the panel have been saying, there are a lot of issues. A lot of them are financing issues, but they're sort of born from without the financial sector. So they're ones to do with the setup of the electricity sector and public policy, perhaps, rather than things that bankers themselves can address. But some of the issues obviously are the level of interest rates. Amazing how much India has achieved, given that costs of debt are 9% or above here, and they're much lower in some of the other countries. The condition of the discoms and the confidence in their ability to pay on time. In the auctions, there's this business of no index linking on tariffs, and that's very different from what happens in most other countries, and that India's made it work so far, but is that really the best thing for investor confidence in the long run? And then corporate PPAs are the rage in Europe and the US, and to some extent they're sort of featuring here in India as well. But from what I've been hearing, there's an issue in terms of the discoms and their preparedness to provide the services, the balancing and so on, that enable corporate PPAs to be signed. And then there's the question of foreign exchange hedging. So that's difficult. It can be done for the short term, can't be done for the longer term, but that's certainly a stumbling block in terms of bringing in international capital.
Very good points. And it is a really good reminder. Europe is flush with money. You know, 21% of institutional investment capital in Europe is sitting in negative or zero interest rate bonds. German bonds, Swedish bonds, Swiss bonds. Those guys need yield. They are going into renewable energy because there's a little bit of yield there now. In other words, they're being pushed out of their comfort zones in the search for yield. Well, as I like to say, where are we going to find yield, really? Where are we going to find yield? India's where we're going to find yield, is what I'm trying to get him to say. This is the place where that capital needs to come. So while we have CPPIB here, we do not have all the major institutional investors in Europe present in India yet. We've got to actually grow this pipeline, take it forward. So that's a background note. But I'm now going to turn it to you as an audience. I'd like you to talk to the person next to you, or the two people next to you. I want you to come up with a question or that you want to ask, or a solution to put on the table that you haven't heard. And I would really love some solutions, by the way. You've got 4 minutes to talk amongst yourselves, please. And then I'm going to ask a few people to stand up and give us what they've discussed or what they put on the table. Is that okay? Unusual for this event, I know, but I am going to ask you to talk amongst yourselves, please. And I know there are some luminaries in the room for ideas. Vinod Kala, I will expect something from you, sir. Please. Go away. 4 minutes. You're off. Talk amongst yourselves. Turn to the person next to you. Introduce yourself and start talking about problems and solutions. I know it's crazy. Please. I'm walking around. If you guys here with a microphone see someone not talking, I expect you to go out there and talk to them. Okay? This is my challenge. Doug, you know what to mean. Angus, grab a microphone. You're going into the audience with me. Come on. We're going to make sure people are talking. Please, this man next to you is a wind guru. Ask him.
I'm not in favor of that.
Sir.
It's not really a credit analysis. Because they don't know all the facts. They're not ready to follow. You don't close. In fact, the banks were closing before the bid. We wouldn't have done that. I went to South Africa twice trying to develop that business. That requirement just stopped us. We don't make a difference in this kind of business. It's not making regulations. So they broke all banking practices to do that.
Comes to the commercialization, step back. Yeah, I know that. Yeah.
They would do better. And that's what it's in today's world. The government is not responsible. That's how it happens. No, the government can't do it. They would deem it non-viable.
Okay, I'm going to draw you back into the main forum now, please. I'm looking for some volunteers to stand up. Women first. We have a very bad gender balance on this panel. So the first couple of questions, I'm afraid, are from women. Can I have any women who'd like to put their hands up first? Thank you.
While we appreciate while we appreciate the price discovery, kind of thing which is being followed, we feel there should be a benchmark set, to make those projects viable, and what the gentleman from Citibank was also saying. So some kind of benchmark should be set for these costs. That is very important for projects to be viable, rather than, just having the reverse bidding in the pursuit for price discovery. Yes.
Shetali. Dipali, my apologies.
Hi everyone. My point would be that as Indians and for the government of India, we should try and look at all the departments in unity. Everything is too separated. Like finance will think about finance, renewable will think about renewable, causing more and more problems for other industries or other ministries. So I think everyone needs to work together, and there should be some sort of integration. There are a lot of technologies that we're not using, like Sir here said about bio-CNG, which could save us, apart from solar and apart from wind. Like you said that, we have a lot of pollution, our air quality is absolutely poor right now. So, there are many innovations that, we tend to overlook. So I think it's important for us to look at everything in unity, whether it be, money, whether it be the ecosystem, whether it be environment, all of that. So that's all.
Thank you very much. Another hand? Please, I'll go over here first, then I'll come back to you.
There is an interesting idea that we came across. I'm sitting with Himachal Pradesh, renewable energy department engineers, and they're saying that there is about 27,000 megawatts of hydro projects there, and there are a lot of renewable energy, other solar projects being done there, and they need refinancing. So one of the possible ideas was, which was that the government could come up with some kind of a trust structure where the assets could be, kind of aggregated and release funding for the developers to develop further projects, because fundamentally the developers are not able to get bank finance due to long duration of these development of hydro projects. So this is some kind of a government-held trust idea that could be used to create a refinancing vehicle for projects. Renewable.
Very important refinancing, because the more easier refinancing is,
yes,
the more people of equity can recycle their capital faster.
Correct.
So very good point. Please, over here.
Thank you very much. We had a very interesting discussion here and came up with challenges and, I'm pleased to say, solutions. The challenges are that the multilateral agencies, the World Bank, the KfW, etc., are making a big contribution to the development of renewables in India, but they could do even more, lend more to projects with short gestation periods and do more to support the supply chain. But quite often their processes and procedures are a bit slow and a bit bureaucratic. We know that the World Bank has lent money to the State Bank for them to disburse more quickly and with a simplified procedure. We'd like to see more of that done by other agencies and it channeled towards some of the ground-based solar schemes as well. And also particularly a hobby horse of mine is a lot of investment will be needed in the supply chain for offshore wind. If people are going to build fabrication plants, going to invest in training, they need access to easy to get low-cost capital. And if the bilaterals provide that through a fast-moving local bank, that would be very helpful.
Thank you. The panellists will respond or to questions they find of interest or have us fix these in a minute. I'm just going to do a whole further round, if that's okay. Please, one here and...
Okay, thank you. Here we had a very interesting discussion with the minister from Sudan about an initiative which is currently undertaken by a group of African countries and which consists in developing a collective, optimal and optional regulatory and contractual framework for solar projects. And the idea is that you can register on a project-by-project basis under this collective and optimal framework. And it allows for large-scale aggregation of demand, especially of long-term debt, and also setting up efficient de-risking mechanisms. And the idea of this pioneering group of countries is to have an instrument which is adapted for all ISA member countries, not only African countries, and which once again would help aggregate the demand for financing and also reduce transaction costs massively. This was presented last week in New York City at the One Planet Summit under the aegis of the French president, and I think it's interesting discussing and having a look at this new leadership coming from African countries in terms of solar and regulatory issues.
Thank you. A really important initiative out of the International Solar Alliance.
Good afternoon, everybody. I am Diptiman Roy from a company, Sterling Wilson Solar. We were talking about investments, green energy. So my solution is, like, we are already doing a work and we are looking forward to use the wasteland, the lands which are used for dumping the garbages. So we are doing in Oman a project where we are using the dump yard for our grid. So in this way, we can also utilize our wastelands to renewable energy, and we can use that land, we can operate and maintain that land, and we can make our environment clean. So this is my humble solution that we can also find it out in India.
Thank you. Very good. I can only take a few more, so it's very short and sharp now, okay? Please, sir.
Thank you, Chairman. I am H. Kumar from CSTV Innovation Center for Solar Promotion Activities. My submission that we are facing the problem of climate change, renewable energy for sustainability. So the action of the 13 Action Plan, 13 Agenda 13, how to make the clean, affordable, clean energy in India to 70% population living in area, rural area.
And the solution?
So, solution that we need a finance as a microfinance with a micro insurance system.
Okay, good point. Very good point.
Hi, I'm Manu from Council on Energy, Environment and Water.
Solutions.
Yes. If we look around, I've been hearing this on the panel discussion that grid integration is a big challenge, right, for big renewables. We have designed this instrument called Grid Integration Guarantee. I think if the grid operators and the transmission companies sort of give some sort of assurances and guarantees that beyond a fixed quantum of if curtailment happens beyond a fixed quantum, there will be compensation from the government that will result in deep de-risking of the renewable investments, and the tariff would also come down.
Nice idea. Nice idea. Sir.
Good afternoon, everyone. I'm Nishit from KFW. The point which I want to raise is that the government should come up with a clear roadmap, and that roadmap needs to be enforced. Like the way the ma'am has mentioned about the benchmarking of the cost. Apart from that cost, there should be also quality aspect which should be involved. And the cancellation of bidding does not give a good aspect for a favorable aspect to developers as well as investors. Thank you.
Thank you. Here.
Thank you very much. My name is Utsav, and I'm an independent researcher in skilling for solar, IoT, and storage in East Africa and India. So my solution would be to create an attractive investment vehicle to access diaspora funds, specifically for industrial and community level projects, not only for rural but also semi-urban areas. That way you give energy access to the upcoming generations and also create a new industrial base for experimenting with new technologies.
Thank you. Sir.
I'm J.K. Das. My group discussed
and we endorse the views of State Bank gentlemen. Because in India, they are experienced with the project financing so far as is zero NP.
Solution, quick.
Zero NP. So this priority sector lending has to go up in consultation with the Ministry of DFS and RBI, so that and it should be tradable, so that other banks will come instead of investing in RIDF, they'll be investing.
You'll join us in our delegation to RBI. Great.
Bruno Rose from Imperial College. Solution that I have in mind, and it's not my idea, it's been said before, we haven't talked about it today, is standardization of contracts. So we know that anything that is anything in finance is standardized. If you want to achieve scale, you need standardization. And so that's one of the things that I like to put on the map. And there's many examples of this in finance. You know, anything is standardized. The next thing is securitization. It's been talked about very briefly, but we talked about refinancing. I think securitization is one of the ways that debt can be refinanced. Again, it requires standardization. Otherwise, you know, the scale can't be achieved. So these are the two things that I like to put on the map.
Thank you. Has anyone here had a portfolio that could be used in a securitization now? I'm shopping for candidates. See me afterwards. We're looking for the first 2 green securitizations out of India. We have a deadline. We want to get them out by March. So I appreciate the bankers are working on this, but in the room, just a bit of a challenge for you. Last 2 questions, then we've got to finish. Anyone else that hasn't had a chance to say? One over here, and any last ones?
Well, there have been two issues have been raised here. One is the compromised revenue stream and the risk mitigation. When the solar project is, and there is a land issue here. So we are going to address both the issues together. We, as an Eureka Global, what we have done is that multi-zone energy harvesting. It means at the bottom, the agriculture will continue. At 30 feet above, there will be a solar panels, which will generate solar energy. And above that, again, there will be a wind energy will be harvested also. So we are combining all 3, photovoltaic, and the kinetic energy. All 3 is harvested, and our first project will come up in Silvassa, which is a government union territory, and then we'll be able to demonstrate. Because because there is now 3 revenue streams separately, it is reduced considerably to a project lender also. Thank you.
Thank you very much. Last question.
Yeah, hi. More than a question, it's a suggestion actually, and we'd like to seek a larger view from the esteemed panel here. One, looking at a journey of a solar in the India, is it a market of a growth or a market of a survival? I want to ask the panel here. Second question is that, do we want to dictate the policies or do we want to discover the prices? And third, do we want to stabilize the policy or do we want to police the stabilization? I think these are the 3 things. If we are able to find out the answers to this question, the journey is wonderful ahead. Thank you.
I was hoping for solutions actually, but okay.
I have given the solutions only. One solution is that instead of a survival market, is any developer happy today quoting those kind of a prices? No. So I think we need to really make it from a market which is not a survival market and really a growth market. So that is the first solution. Second is that, what do we want to do? Do we want to have a FIT or we want to have auctions which are cancelled frequently? So I think we need to have a clear roadmap ahead. So there has to be balance. Do we want to discover the prices or we want to dictate the prices? And third, it's a stabilization process. I agree that the policy stability is a fundamental thing to steer the growth for the sector. So that is really very important to my mind.
Fantastic. Thank you very much. Thank you for indulging me in that, everyone. I really appreciate that input. I'm now going to ask our panel to respond in some ways. Who can I start? Who would like to start with? Mr. Riskina.
I'll take the question on financing. The issue of short-term financing being available. This is a problem in India, and while Mr. Parikh and the State Bank of India are doing a lot of financing, he'll be the first to tell you that this is a small part of his activity. Mr. Popley here is representing a specialist financial institution. What we did in 1994 was a very foolish decision when we effectively closed down the development financial institutions. The IDBI, the ICICI, which were the backbone of industrial and infrastructure growth in India. Interestingly for this audience, some of you may know, 1994, India closed down the DFIs or started the process of closing them down. In 1994, China set up the China Development Bank and the China Exim Bank. Today, the balance sheet of the China Development Bank is bigger than India's GDP. I'll say that again. The balance sheet of the China Development Bank is bigger than India's GDP. I appreciate I'm comparing a stock and a flow, but that tells you where they went and where we went. What is the solution? You cannot go to the commercial banks, and I'm sure Mr. Parekh will agree with me, the commercial banks are not meant to finance this kind of long-term project. You need either a specialized institution, and if you recall, earlier this year, the Reserve Bank floated a discussion paper on its website asking for suggestions on whether we should once again have the DFIs. If not that, we have to get the bond market moving. The bond market, we have this distrust in India of the bond market, which I've never been able to understand why. Every issue of long-term debt in India, be it tax concessional debt or be it normal commercial debt, has been oversubscribed, which is something I cannot say for equity issues in India, which means there is a market. Pension funds, people who are heading for retirement, like grey-haired people like me, are looking for locking in long-term returns. So there is a market if we can get the rating agencies to do their job properly. You know what's happened recently with the ILFS? If we can get proper, reliable ratings, if we can get reliable market tracking, the bond market will come in place of the bank market, which cannot do this kind of long-term financing.
God, I couldn't agree more about the bond market. But do you think it's just fixing up the rating agencies? Is that the silver bullet solution to get a bond market going?
There's a confidence issue right now, Sean. I don't know how much you've been tracking the
tracking
Indian
the ILFS,
developments.
absolutely.
Exactly. So right
But that's
now,
recent.
Well, I would put it, have you seen the prices in the bond market? You can pick up a AA rated bond for about 82 cents on the dollar.
I'm getting my checkbook out, okay? Okay, fair point. Mike, please, your thoughts. What, in front of you.
Okay, first I want to support that because my intervention earlier was about the bond market, so let's talk afterwards. But I want to pick up on a point back here, which I think has been missed mostly, and that is solar energy for the people that don't have electricity. And that's what I was working on in 1996, so I feel I should put forward my thoughts on this. And I'm getting old, so I'm getting impatient that India will address this. Because the rest of the people that don't have electricity are mainly in Africa. And there's so many countries, they can't come up with a single solution. Half of the people that don't have electricity are in India. This country can solve that problem with a national commitment. And I point out where. Where people have electricity, you have government agencies protecting their interests and rights and setting the rate to be fair and equitable, correct? Everywhere in the world does this. Government oversees setting the rates. What do you do for the people who have no electricity? Nothing. I recommend that the government of India adopt a regulatory regime for electricity for those that don't have electricity, because that will make it financeable. It makes it predictable. Now we know where India is going on electrification using solar energy, because there's a set of rules and somebody overseeing that whole market of 600 million people. This will go on for decades, but at least the rules will be set. And where there are no rules, there is no financing. It's ad hoc. That's why it isn't working. I actually worked that in the 1990s, so I'm speaking from that experience, that the reason we couldn't get financing for off-grid solar is because there were no rules. The source of money would say, well, what are the rules? There are no rules, therefore no financing. So I'm suggesting the key to open that door is to get a regulatory protection regime to protect the people so they can get electricity for the first time. And I see some nodding going on, so thank you for listening to that.
Thank you. I'm going to ask Sindor to say next. This is a very rich discussion, and it's being recorded. The conference organisers will capture comments, and they'll be publishing out of it. So you'll get access to comments like Mike's and Sindor's afterwards. Please.
So I'll speak on behalf of the developers since I'm the only one here. I think I will pick up on his comment as well as the lady's comment there with respect to the tariffs and the developers' bids that are sort of hitting very low levels right now. So I think what how the sector has evolved has been unique over the last 7 years. There's also been a learning curve. We started off with MOU based, we went on to competitive bidding, closed envelope system. That has now evolved into reverse bidding. So the solar sector itself has seen this evolution, but I think the other sectors in infrastructure in India itself have also evolved, and I think we need to now We've seen in the road sector, the HAM model currently is working well. The government sets a benchmark, as you mentioned. And we've actually seen that the bids against the benchmark are actually higher. They're on the cost, but they're actually higher, so 10, 15% higher. I think that kind of a system can be looked at if the government doesn't want to go back to closed bidding. But the idea really was to discover the tariff. And I think now, over the last year or so, we've really sort of seen that last 8 years we saw a decrease in pricing, but I think in the last 6 months to 12 months, we've started seeing prices probably stabilize. We've seen spurts, we've seen, there hasn't been a drastic fall anymore, and that's not expected going forward either. I think the other thing is, by putting the cap on the tariffs, the government is really not thinking about the risks that the developer and eventually the bankers and the investors are undertaking. The dollar itself in the last month has gone up to 73.7 or so. These projects are going to come out 2 years ahead, a year and a half ahead. No one is pricing that risk in right now. There are several other risks, but I think the idea of the cap really needs to go away, and we need to actually discover the tariff.
Very good points. Thank you. Ashok.
I would start with the point made, a good point made with reference to Himachal Pradesh hydro project. I think that's a great opportunity for the private sector to come forward, create a holdco, bring all those small hydros under its banner, get a funding at the aggregate level, both debt as well as equity. And this has been a good opportunity, and I've been talking to Himachal Pradesh government as well as their hydro corporations to somehow find an institution and the instruments in that regard. Second thing is, I would again reiterate that we have been talking about the problems in the bits and pieces, and the patchwork would not work. We need to look at the entire value chain from a conception of the project to its implementation, operation, generation, and the transmissions. We have been looking in a bits and pieces, and that would not take us anywhere. The third thing is that we have also to look at, I'm sure the consumers are not sitting in this hall, but we'll also look at those poor consumers. If there are bids, the market should be allowed to discover the price, what would be balancing between the risk and rewards. If 2 rupees 50 paisa is not good enough, and I'm sure market has given a response to the government that things would not move forward, I'm sure the government would listen to that. So I would believe instead of fixing a benchmark and then allowing it, I would believe that they let the market forces work for themselves. The thirdly is that many risks around the project development, and I would believe the private sector, the project developer have to come around and to find out the ways and means to handle those. For example, the fluctuation or the volatility in the weather conditions affecting the generations. This year, the wind generation is very low, and therefore I'm sure the institutions are going to face problems. Why are not we having an insurance product? This doesn't require the government interventions. The quality of the panels that we are importing, no one is sure. I'm sure those are very good. But in the private sector, certainly there will be some initiatives which are not cost, which doesn't entail much capital cost, can be taken to assure the government, the consumers, that these plants would sustain 25 years, and if yesterday's newspaper report says, maybe 50 years to deliver the power at the zero cost. So what I'm trying to say is that we need to have a holistic view, and the point that was the 3 questions those were posed, or the dilemmas those were posed in the last, is again a question of having a holistic approach. And remember, the sectors would always have a turbulence, they would always have a risk. The approach should be that we have the risk and not the uncertainties. If you are able to reduce the uncertainties, then we as a developer, as institutions, have to live with the risk, have to identify and mitigate those risks. So let's not be concerned about the risk. Let's try to avoid and reduce and remove the uncertainties. Thank you.
The insurance is very interesting. The first big wind bond ever done was for Breeze in Europe, and it plummeted in price on the secondary market after a couple of years because wind performance was way down against expectations the first couple of years. However, the long-term forecast is still the same. If they had weather insurance to ensure cash flows were stable, they wouldn't have had this problem in the secondary market, and that would have made a huge difference to confidence in green and wind bonds in Europe for the following
Let me
years.
add another one point, if you take another couple of seconds, is that we have an EPC contracts for 15, 20, 25 years. I don't think in the present day dynamic scenario, any organization can believe to sustain for more than 10, 15 years the present format. What for these EPC contracts, O&M contracts are all about? We need to have an insurance mechanism. And remember, 90% of the panels are imported outside the countries, and there are many political, economic factors that goes into sustainability of contracts. Do we have an insurance mechanism? Can we have? And I don't think we need to depend on the government for evolving those mechanisms which mitigate the risks.
Thank you. Satish, this is currently our wrap-up round, by the way, folks. We've got about 10 minutes to go, just to alert you.
Thanks, Ian. First of all, I'll agree with David's comments that India currently needs a Bharat Bank for Sustainable Development. It's badly needed, and if we are really focused on sustainable development in the country, we require an institution of that nature. The second, again coming back to the green bond, like an RPO obligation which the DISCOMs have or the entities have, the banking sector needs to have a similar obligation to have part of their portfolio as green bonds. And that has to come and will change the whole funding scenario for the country as such.
Thank you. Thomas, you're next.
I
love the way you keep talking about green bonds, Satish. Thank you so much.
Yeah, I'll talk about something else. I'll respond to Charles Yates' comments about the need for the World Bank and others to invest down the supply chain in India, and also to the woman who said something about the need for coordination. I think it's an obvious opportunity for a lot of the money now stuck around bonds with negative interest rate to look down the supply chain in India with the dramatic ambitions and the success of the development on the actual plants. That down the supply chain there are a lot of opportunities to invest, and that should be made clear. Not necessarily something the World Bank should do. There should be others who could do it. And giving attention to the supply chain may also be a very important way of reducing project risks and reducing costs for the projects. And I will briefly describe what was done in Sweden 10 years ago when the ambition to develop wind power was very strong. We did not do anything on the finance side. What we did, and I was directing the energy agency at the time, was that we did coordination of all the different authorities involved in the permission process, even to the extent that we went into training local civil servants who were going to handle permission processes to make these predictable and consistent throughout the country. We did engage in facilitating coordination between sub-suppliers, in particular in the construction sector, and we did do training of technicians. A sort of facilitation and sort of preparing the stage for the actors that would then take on all the market risks and so on themselves. No direct subsidy, but preparing for the financial sector to have a predictable environment. And the need for coordination between ministries and authorities in making the permission processes reasonably predictable and clear is a very valuable way of reducing the early stage project risks and reducing the long-term cost of these projects.
Very good point, Thomas, and thanks for raising that question at the back there earlier. Angus. Speak up.
You had an exchange with a member of the audience about refinancing and in terms of recycling capital onto further projects. I think refinancing has another element to it as well, and that is if you can refinance equity as a developer, bringing in long-term investment institutions at a stage after completion of the project and make a profit on selling on that equity to institution with a lower rate of return expectation, then that actually helps the developer not just in terms of recycling capital, but also in terms of making their own IRR requirement that they'd have had at the beginning of the project. So it's part and parcel of getting costs down in the long term. I think there's latent interest amongst international investors in investing in Indian renewables. It's very interesting. We've got a representative of a big Canadian pension fund on this panel, And I'd be very interested to hear from Bruce how close he is to making big investments in renewable energy projects in India, and if there's a specific thing that's making that difficult.
Bruce, I think we have to go to you.
Thank you. So first of all, I just want to say I've never been on a panel where I've actually learned more from the audience than being on the panel, so this is fantastic.
A big clap for the audience, please.
Yeah. So it makes our job easier. No, I'm here for a reason. I wasn't just popping by. So we do see, like, as an international investor, the phenomenal growth in India, and just in terms of the supply of renewable energy, is phenomenal. That's number one. So we're just attracted by the sheer scale. Number two, one conversation we had is, I think maybe it's lost in you just because you're living it, but how much India has leapfrogged in terms of learning from and staying on the shoulders of what other jurisdictions have done. It's incredible just the scale and scope of how quickly this is built up and how quickly you've gone to the most sophisticated problems that are dealt with around the world. Look, the one thing I would say in terms of attracting international capital will be, and there was one conversation around standardization, working through some of the kinks. So the conversation about homogeneity of credit with the discos, that's getting better, it's being addressed, and there's definitely evolution there, but the more that the contracts are consistent, the creditworthiness of the counterparties is consistent, the easier and the more transparent it is for investors to come in, the more you'll see institutional investors domestically and also internationally, which will see the dynamics of India and why they want to be here, but also then be able to more quickly understand portfolios of equity investments and or credit investments. Again, I think that's going to be important, and it's evolving. So it's attractive, fundamental growth, the electrification, all the reasons that we like investing in the sector are here, and there's an evolution to make it easier for people like us to invest in it.
Great points. Thank you so much. Thank you. Go ahead.
Thank you, Sean. Let me pick up on 2 points from 2 speakers. One was on integration. It means we are not talking about renewables in silos. It's time to come out of silos of solar, wind, and others. We start integrating renewables with livelihoods, productivity of land, agriculture, water, and of course, other ecosystem services. Second, multi-zonal energy services, a very good way to go forward. And here, since a lot of bankers are present here and of course developers are present here, let me challenge a very ambitious program for India, what we are looking at. 10% of India's degraded land, that comes to 10 million hectares. It can be forested land in the papers, but there's nothing growing there. It's an absolutely desertified land or otherwise. Let's go for a public-private partnership, talking about $200 per hectare for making productive. So we're talking $2 billion program, plus adding to the renewable cost. Even 10% of that, 1 million hectare, we are talking about almost 200 gigawatts. And here I would like to challenge, of course, IRIDA, CMD, Mr. Popley and other partners here, that you become one of the first agencies in the world to link land and renewable energy at a business model. No charity here, no subsidy here. Business model, let us test it on policy side, fiscal incentive side, and what it means to a country like India. That can be then replicated and scaled up rest part of the world.
Thank you. Doug.
Thanks, Sean. So I'll just quickly say that kind of activity could be undertaken by this special green window at IRIDA for new activities. So just picking up on a couple of things. One was the idea of integrating different technologies in agriculture, how that could be funded, and also concerns about the impacts of large projects. There's a CSR responsibility in India, 20%, or I can't remember what the number is, but significant amount of corporate profits have to be rolled into sustainable projects. Why not take that money and aggregate that money and do things like these innovative projects? That's the first thing. In terms of the off-grid energy access space, I think India has 2 great success stories that we discussed today. One of them is the auction process, which has really been a major success. The other one is EESL, which is about procurement, aggregation of demand, and driving down prices. So why not have an auction for off-grid, a centralized auction, where you find the best off-grid developers in the world, bring them here, give them scale, and say, give us the best price on off-grid.
Great idea, Doug. Thank you. Robert, the elephant in the room.
As far as the State Bank is concerned, we have got a target, or we have set an ambition to fund 75,000 crores for renewable energy by 2015 to 20. We are, till such time, a specialized institution is there, as Mr. David Raskina said. State Bank is taking care of its responsibility. You see, in our revised vision, mission, values, the values consist of steps where the last S is nothing but sustainability. We are committed to ensure that sustainability. We care for the environment, and any step which we need to take, even taking exposure for 15, 20 years, just for the sake of promoting renewable energy, State Bank is committed to that. In order to meet requirement of long tenure loans of 15, 20 years, State Bank has negotiated some lines of credit. It has got grid-connected rooftop solar line of credit from World Bank of $625 million US, where 240 million has been withdrawn till date. The purpose of this line is to take care of long-term tenor loans at concessional rates. We have got line of credits from EIB, we have got lines of credit from KFW, we have got a technical service arrangement where we are training our credit officers in the area of renewable energy. We are already in discussion with many other ECAs or the other such type of institution in the world to have lines of credit to promote renewable energy in India. I represent Project Finance Department of State Bank of India, and my problem, I have no issue till such time my money is paid. My problem starts when money is not going to be paid. In 2007-8, when we did a lot of power projects, we never anticipated that these power projects in a country like India, which is power deficient, will face problem. But we are living in a VUCA world, where anything may happen. We cannot envisage the black swan event, but now we have to think, because black swan events are become quite frequent. And when this sort of situation is there, it is a very difficult situation, or it's my predicament as a project finance guy. So I want some assurance at some level where the money, the public money which I am dealing with, will be paid. Can government think of creating an institution like CGT, MSE, which they have created for MSME, for renewable energy, where if any concessionaire or any developer is going below a certain DSCR, they step into to take care of bank's liability. Why a developer or why a banker should run around DISCOMs or other authorities to recover the money? This is not our job. Government has to facilitate that. You see what was happening in the road sector. In the BOT project, the kind of experience we had. Immediately government had brought the HEM policy. Can't we think of a policy for renewable energy, where the credit risk can be taken by bank, and after that repayment risk can be taken by government, and let the government at central and state, they should sort out the issue of DISCOM. But money should come back. This will promote the renewable energy culture in the bank.
Thank you. So this has been a discussion about plumbing, about engineering, of finance going forward. Remember the prize here, though. We're not just building solar, we're not just financing stuff, we are delivering energy for all. That is a very high-level ambition and critical delivery to the livelihoods of people in India and around the world. We are also, while doing that, delivering cleaner air. We are also, while we're doing that, delivering solutions to climate change, which is something that is going to knock India for 6 in the next 30 years on current projections. So this is a grand plan. And by the way, we might also, while we're at it, help with the structural economic stability of India by kicking oil out of the room and replacing it with local clean energy, which will allow constant 7% growth, rather than growth that goes whoomp and whoomp and whoomp as oil prices go up and down. There's a lot of wins here. It's your job to make it happen. Your job out there, with the help of the finances and the stage. Give a big hand to our panel. A superb panel, if I might say. But can I also say, give a big hand to yourself, as Bruce said, a superb audience, please. Thank you. And now I'd like to invite Mr. Poppy to come up and take us out. Sir.
Thank you very much for an excellent panel discussion here. We must give a big hand to our moderator, Sean Kidney, please. And thank you, Sean, for changing the format, making it much more interactive. And we have got very good suggestions from the audience. Some of the suggestions that came out because of the discussions here, one was Dr. Monga spoke about the land degradation. Mr. Prabodh Parikh spoke about priority sector lending. I think what is possible is that projects that come up on degraded land should in the first phase be covered under priority sector lending. That is immensely possible. And that I think the government should agree. Then there was an issue on payment security mechanism and creditworthiness of utilities. Government has been after financial institutions to come out with the mechanism. We had discussions with World Bank. PFC REC was on board, but that is purely lacking on part of financial institutions. It's not government issue. Government sincerely wanted that we should come out with a payment security mechanism. I'm sure we will take it up again, this issue. Then, of course, enforcement of contracts has been very weak. My suggestion is that maybe we can think of special courts, special electricity courts where contracts related to this can be addressed because we have a huge electricity market and normal courts cannot do it. Then there was, Mr. Askina talked about China Development Bank having a GDP more than of India. We have KfW as a development bank who has a very large balance sheet. We had given a suggestion that developmental financial institution should not be paying dividend or tax. That should go as a growth capital for them. Now that government should, take it forward. This is a suggestion we will put forward again with force to the government. I think sale of equity to institutions will help bring down cost. That was the suggestion you had given. I think that was, I think institutions should take it forward. I have not covered everyone because our moderator has done an excellent job. He has summarized it well. So I would once again like to thank all the panelists and the moderator and the great audience. Thank you very much. And we should give a big hand again before I close. I'll quickly like to give memento to